Well, here we are. It is Friday, and I'm back for another day this week. Just let me bring you up to date. 10 weeks ago today, I had open heart surgery. I feel fine. It's all good, and I ought to be good for another 30 or 40 years. But I want to thank everybody for their prayers. And the cards that I have got have been amazing, beyond my belief. So just be aware. Thank you so much. But want to get back into the game here. I moved the times for these to 11 a.m. I'm going to see if that works better for me, because before at noon, it always seemed there were other things that were trying and challenging. So we're going to do this at 11 o'clock, and we're only going to do it 2 days a week. Mostly Monday and Friday are going to be the 2 days a week for the podcast. Don't forget, you can get my books for free. The Family Money Farm, the CFO Project, and Financial Mastery Coaching. You can get it by going to cfo-project.com. It's up above. Put in your name and email address, and you will get an email with a link in it to download both of those books. Do you really care about your financial future? There are a lot of pieces of this puzzle that have to come into play, and so many people, they are sold single policies. We talked last week or the beginning of the week about life insurance, and I've called today's podcast "Life Insurance, Will It Pay When I Die?" There is a novel story to that, because a number of years ago, I wrote a book called Life Insurance, Will It Pay When I Die? And that was the result. I wrote an article, and the title of the article was Life Insurance, Will It Pay When I Die? Widow loses life insurance. Widow dies destitute because of loss of husband's life insurance. That was what the article. And I published it, and it literally was picked up around the world, which led to the book, Life Insurance, Will It Pay When I Die? And so it's been an amazing journey. I've been at this for 49 and a half years. And in the last 30 years or so, I have really been awakened by some of the people that I have met that have become mentors in my life. And life insurance is an important thing. But it is so hard to find somebody that will be able to give you the truth. And that's really what it comes down to. There are a lot of different products. There's term insurance out there. I write a lot of term insurance on younger families so that we can provide enough death benefit to make and reach the goal of economic human life value. Permanent life insurance, which I refer to as dividend-paying whole life insurance, with a mutual company or a holding company that is part of a mutual life insurance company where you share ownership and you share in the profits. If there wasn't any profit in the life insurance business, why would there be over 850 other companies out there that are simply corporations owned by stockholders in business for profit? So we got to get that out of our mind. In other words, guys like Dave Ramsey, and I talked about him at the beginning of the week. He tells people never buy permanent life insurance, only buy term insurance, etc. And I said 99% of what he says is true, because it lacks information. Now, Dave Ramsey has no financial credibility. He has no financial credentials. He is an entertainer, and he's created a couple of workbooks that are just common things to help with budgeting money. I do all of that with clients that I meet nationally. Again, I have clients in over 38 states across the country. So we do a lot of work with Zoom meetings and help people a lot. But I titled this thing today, Life Insurance, Will It Pay When I Die? Because so many of the different kinds of life insurance that we purchase them without thinking long-term. Now, one of my mentors in life, R. Nelson Nash, the author of the book, The Infinite Banking Concept, he always told me, he says, Tom, he says, you have to think long-term. God rest his soul. He died a couple of years ago, but he was an amazing mentor in my life and opened my mind to a lot of ideas. Now, there's term life insurance, and term insurance you can get for a 10-year level premium, 15, 20-year, 30-year level premium. There are even companies out there that go beyond that. But realize term insurance is for a term of time. And people think, when I'm young and I'm raising a family, I need life insurance to protect the family. That's absolutely correct. How much life insurance should I purchase? You should get as close as you can, if not economic human life value. And economic human life value is a number of years that you are expected to earn an income. So if you're 40 years old, you're going to work to 65 or 70. So you would take 25 times your annual income. And that would be pretty accurate to what the insurance companies would offer. They will not overinsure you. They will not offer you or allow you to purchase more life insurance than you should own. But economic human life value is also talked about in a book from, I think of the author right now, Solomon, and it was 1927 when he wrote the book about the economics of life insurance. And that is a standalone book. I have read it. I have copies of it, so I can provide for people if they would be interested. But it's called The Economics of Life Insurance. And God, for the life of me, I can't think of the author's name right now. I haven't looked at the book for quite a while. But you have term life insurance. Now, another level of term life insurance is what is known as universal life insurance. And universal life insurance is universal, is what it is. So the premium can be raised or lowered on the policy. But beware, inside that contract, inside the motor, if you open it up and look inside, you're going to find that there is a term cost referred to in the policy as a mortality cost. And as you get older, that cost increases every year in the contract. So when you get to be 60 or 70 years old, that cost of the term insurance inside that contract is going to get so large that eventually you may lose that insurance. And unless you pay substantial amount more of premium. And in that lies the problem, where paying more premium later on, you end up paying in more premium than the policy pays out as a death benefit, because the death benefit is level. And if I'm paying an ever increasing premium along the way, I risk paying more into it than it's ever going to pay me in the long run. But there are several versions. There was universal life that was created back in the 1980s, the early 80s. And then there was variable universal life insurance, which they thought, well, they were going to really boost the cash value to eliminate some of these problems and tie it to the stock market. Well, that didn't work out real well after a couple of crashes in the stock market. And now today we have a product called indexed universal life insurance, which your money is not in the stock market, but it tracks an index in the stock market. And the movement of that index determines the rate of return on your cash value. And many of those policies have caps, so you're limited to how on the upside of what you can earn. But those policies also have an exorbitant amount of fees internally, because what they buy is they purchase options to guarantee that they can pay out the value at the end of the year if there was a gain. So, and then if the stock market goes negative, well, then the worst thing that can happen is you earn zero in that particular year. This is a method from annuities. Annuities came out with indexed annuities, fixed index annuities a long time ago. They are a good deal if you want and believe the stock market is going to do well. You can purchase a fixed index annuity. So your money's not in the stock market, but it tracks a market type index of some kind. And at the end of the year, on an index policy that I've used in 2022, it grew at 19% that year. That was the gain. And you got 65% of the gain. So you ended up making about 12% or a little bit more than 12%. So that was in 2022 on that particular index. I don't want to get too far in the weeds and provide too much misinformation and going on. But there's term insurance, there is universal life insurance, and in universal life, there is universal life, variable universal life, and the new product is called indexed universal life insurance. And the problem with all of those policies, if you live long enough into your 70s and 80s, there is a risk of at a time when you wanted the insurance and need it the most, you risk losing it unless you pay unbelievable premiums in the back end to keep the policy alive. And that increase happens every year in later and later years. So that brings me to whole life insurance. Whole life insurance, there are two kinds of insurance companies. I talked about this on Monday. There are stock insurance companies that are owned by stockholders. They are operated for profit, and those profits go to the stockholders. Dividend-paying mutual life insurance companies are basically owned by the policyholders. Even your policy might say stock insurance company on it, but it's part of a mutual holding company, which still puts you in the position of receiving the dividend and the profits of the company, because in those again, why did it do that? I don't know. $3,000 a year. And if I take all the premiums I paid into that policy up till now, I would have had to have earned after tax 4.5% on average for the last 38 years in a bank account in order to equal the cash value in this policy. And I have used that cash value as leverage to borrow money from the insurance company. And my cash value is still earning dividends and still earning interest while I have an insurance company. And the loan from the insurance company is unstructured, so that absolutely. But it also guarantees that you can exchange the policy for a whole life policy at some future date without ever having to prove insurability again. You never have to prove that you're healthy or medical. And those term policies, if they're done correctly, one of the companies I use has a disability benefit that if you become disabled and after 4 months you can't perform the material and substantial duties of your job, then they take over making the payments. If you're going to be permanently disabled, then they are not only going to pay the premiums on the term insurance, they will convert it to a cash value accumulating whole life policy, and they will also pay all of those premiums. Now, I only know of one company in the marketplace that goes that far, that pays that full premium. And I've had a few clients that have utilized that, and it's been unbelievable the amount of money that they were able to create by retirement, where their 401k and those type of plans, if you're disabled and not working, nobody's going to add any money to any of those accounts. So the big picture that I'm talking about, life insurance is a piece of that foundational puzzle that you are trying to build to find financial success in the future. It's like there's two lines, two parallel lines. The top line is about protection, liability, disability, and death. But it's about the amount and the type and the positioning of that coverage to make sure that it's correct. On the other line is about wealth creation, capital. Now, when you put money in your 401k, yeah, over your long life, if you're going to put it and fund that 401k every year to the maximum, it's going to create millions of dollars but realize it's before tax. With 35 trillion of debt the country has right now, and over 218 trillion of unfunded liability, do you think the taxes in the future are going to be higher, the same, or lower than they are today? The only way you're going to be in a lower tax bracket is if you are dead broke when you reach retirement. If your plan is to be dead broke, I can't help you. If your plan is to have the most you can have when you get to retirement, I'm the guy you want to talk to. Again, you can get both of my books, The Family Money Farm, The CFO Project, and Financial Mastery Coaching, by going to cfo-project.com, going across the board right there, putting your name and email address, and you will get an email with a link to download both of those books. There is also an opportunity for coaching with me and other educational materials regarding finance that are available at the same time for small amount of money or small fee. So take advantage. Everything comes with a 30-day money-back guarantee. If you buy the next level, go there, and it is not what you wanted or doesn't fit what you're doing, then let me know and I will refund your money. So it comes with a guaranteed refundable cost, all the way up at all the levels. Again, I coach people across the country. I want to throw in a quote today. As I wrap up today's talk, I want to throw in a quote. We can't solve problems by using the same kind of thinking we used when we created them. And that's from Albert Einstein. You know, it is unique to look at those kind of things. And here we are, and look at the problems that society has all across the board. And again, you cannot solve problems at the same level of thinking that you had when you created the problem. God bless you all. Give me an opportunity to change the end of your movie. When I put together a financial plan for somebody, we run a movie so we can actually, in time, show you exactly what is going to happen going forward. Again, life insurance is a key ingredient to the foundation of your financial plan. Don't let anybody tell you otherwise. God bless. We'll see you here again next week. And again, we try to be in here at 11 o'clock. And the goal is Monday and Friday around 11 o'clock. God bless.